For 50 years, one deal kept America rich without working for it. No votes, no wars, just oil and dollars. That deal is now broken, and almost nobody noticed. In this video, I'll show you three things. First, the exact deal Saudi Arabia just walked away from, and why it was the foundation of American financial power for half a century. Second, why this wasn't symbolic, it was fatal for the dollar system, and the consequences are already unfolding. And third, why 2026 is the danger zone no one is prepared for. Because when oil stops needing dollars, America loses something it can never print back. Let me start with what you'll hear from mainstream media. You'll hear that nothing really happened. That on June 9th, 2024, a 50-year agreement between the United States and Saudi Arabia quietly expired. That's it, just expired. No drama, no crisis. Media will tell you that Saudi Arabia letting this agreement lapse doesn't change anything. Oil will still be traded in dollars. OPEC still prices in dollars. Markets are calm. The dollar is still the world's reserve currency. This is just a technicality, a formality, nothing to worry about. Financial analysts will say the petrodollar is a myth anyway, that there was never a formal requirement for Saudi Arabia to only accept dollars, that this whole story is being exaggerated by gold bugs and doom prophets. They'll tell you to look at the data. The dollar is still 60% of global reserves. Most international trade still clears in dollars. The system is stable. Everything is fine. Go back to sleep. That story sounds nice. It lets you believe the world you grew up in still exists, that the rules haven't changed, that American power is still absolute. It's also completely wrong. And by the end of this video, you'll understand why June 9th, 2024 will be remembered as the day the financial ground shifted beneath America's feet. To understand what just broke, you need to understand what the petrodollar actually was. And most people get this completely wrong. Let me take you back. August 15th, 1971. President Richard Nixon appears on television and announces that the United States will no longer convert dollars to gold. The Bretton Woods system, which had backed the dollar with gold since 1944, was dead. Overnight, the dollar became pure paper, pure faith, pure promise. And Wall Street panicked. Because if the dollar wasn't backed by gold anymore, why would anyone want it? Why would foreign countries keep holding dollars? What gave the dollar value? Nixon's advisors understood the problem, and they found a solution, not in gold, in oil. In 1974, Secretary of State Henry Kissinger traveled to Saudi Arabia, and in the royal palaces of Riyadh, he negotiated a deal that would define the next 50 years of global finance. Here's what the United States promised Saudi Arabia: military protection, advanced weapons, intelligence sharing, guaranteed security against any regional threat. Saudi Arabia could always count on American power backing them. And here's what Saudi Arabia promised in return. All oil exports would be priced and sold exclusively in US dollars. Every barrel, every contract, every transaction, only dollars. But the deal went deeper. Saudi Arabia would take the dollars they earned from oil sales and invest them back into US Treasury bonds. They would recycle petrodollars into American debt. They would fund the US government's deficit spending. This is the petrodollar system. And here's why it was genius. Every country in the world needs oil. Japan needs oil. Europe needs oil. China needs oil. India needs oil. Everyone needs oil. And if oil can only be bought with dollars, then everyone needs dollars. This created permanent structural demand for the US currency. It didn't matter if America ran deficits. It didn't matter if America printed money. The world still needed dollars because the world needed oil. The petrodollar wasn't about oil. It was about forcing the world to fund America's debt. It was about making the dollar essential to the global economy without backing it with anything real. It was the greatest financial engineering in modern history, and for 50 years, it worked. America could borrow trillions, print trillions, spend trillions, and the world would absorb it because they had no choice. They needed dollars to buy oil. Until June 9th, 2024, when that system quietly came to an end. So what actually happened on June 9th, 2024? Officially, a 50-year security and economic cooperation agreement between the US and Saudi Arabia expired. The agreement that formalized the petrodollar arrangement, and Saudi Arabia chose not to renew it. No announcement, no press conference, no dramatic declaration. It just expired. Quietly. In the background. While the world was distracted by elections, wars, and celebrity scandals. But if you were watching Saudi Arabia's actions over the previous 3 years, you would have seen this coming. Because Saudi Arabia had been systematically preparing for this moment. December 2022. Chinese President Xi Jinping visits Riyadh. Not a routine diplomatic visit. A 3-day state visit with full ceremonial honors. And during that visit, Xi and Saudi Crown Prince Mohammed bin Salman discussed something that would have been unthinkable 5 years earlier, pricing oil in Chinese yuan, March 2023. Saudi Arabia, the United States' closest Arab ally for 80 years, announces it's in dialogue with BRICS nations about potential membership. BRICS, the economic alliance explicitly created to challenge Western financial dominance. The alliance led by China and Russia. Throughout 2023 and 2024, Saudi Arabia begins accepting payment for oil in currencies other than dollars. Not for every contract, not publicly, but quietly, selectively, with specific buyers. They start accepting yuan, accepting euros, accepting local currency settlements. January 2024, Saudi Arabia signs a comprehensive strategic partnership with China covering security, technology, and energy, the kind of partnership they use to have exclusively with the United States. And then June 9th, 2024, the agreement expires, and Saudi Arabia says nothing, does nothing, just lets it lapse. Saudi Arabia didn't attack the dollar, they simply stopped defending it. And in geopolitics, that's often more devastating than an attack, because it signals to the entire world. Now, the old rules don't apply anymore. The old guarantees are gone. The old system is optional now. Now, let me explain why this feels like betrayal, not just policy disagreement, not just strategic realignment, betrayal. For 80 years, since the founding of modern Saudi Arabia, the United States has been the kingdom's security guarantor. When Iraq invaded Kuwait in 1990 and threatened Saudi borders, it was American troops who deployed to defend them. When regional threats emerged, Iran, extremist groups, rival powers, it was American military might that kept Saudi Arabia safe. The weapon systems that defend Saudi airspace, American. The intelligence that tracks terrorist threats, American. The diplomatic cover in international forums, American. The implicit nuclear umbrella that prevents adversaries from becoming too aggressive, American. Saudi Arabia didn't build the security on their own, they bought it with a promise that oil would only be sold for dollars, that the kingdom would use its influence within OPEC to maintain dollar pricing, that petrodollars would flow back into U.S. Treasury bonds. For decades, this was the foundation of the relationship. America provides security, Saudi Arabia provides dollar support. Symbiotic, mutual, reliable, and then, with no warning, with no negotiation, with no attempt to renegotiate terms, Saudi Arabia walks away. They don't renew the agreement. They start accepting other currencies. They cozy up to China. They join conversations with BRICS. From Washington's perspective, this looks like betrayal. We protected you for 80 years, and this is how you repay us? By undermining the dollar? By empowering our rivals? By abandoning the system that kept both of us prosperous? But here's what Washington doesn't want to admit. Saudi Arabia didn't betray America. Saudi Arabia saw America weaponize the dollar and realized they could be next. When the U.S. froze $300 billion of Russian reserves in 2022, every country holding dollar assets learned the same lesson. Your money isn't safe if you're on the wrong side of American foreign policy. Today it's Russia. Tomorrow it could be China. Next week it could be you. Saudi Arabia looked at that lesson and made a choice. Diversify. Hedge. Prepare for a world where the dollar is a weapon, not a neutral reserve currency. This wasn't betrayal with words. It was betrayal with silence. The quiet decision not to renew. The quiet acceptance of other currencies. The quiet pivot toward other partners. And silence, in geopolitics, is often the loudest message. So why does 2026 matter? Why not 2024, when the agreement expired? Why not 2025? Why is 2026 the danger zone? Because 2026 is when multiple financial pressures converge at the same time. Let me show you the timeline that has Treasury officials quietly panicking. First, the Treasury refinancing wall. Between 2020 and 2022, the U.S. government issued trillions of dollars in debt at near zero interest rates. Those bonds were mostly short-term, 2-year and 3-year maturities. Why? Because short-term debt was cheaper. Rates were low. It made sense to borrow short. But here's the problem. Starting in late 2025 and accelerating through 2026 and 2027, those bonds mature. They have to be repaid or refinanced. We're talking about $7.6 trillion in U.S. debt that needs to be rolled over between 2025 and 2027. Normally, this wouldn't be a crisis. You just issue new bonds to pay off old bonds. Refinancing. But there are two problems. One, interest rates are now much higher. The debt that was issued at 0.5% now has to be refinanced at 4%, 5%, maybe 6%. That explodes the interest cost. And two, who's going to buy the new bonds? Second, exploding debt interest payments. The U.S. government is now paying over $1 trillion per year just on interest. Not paying down the debt, just interest. And as those trillions of bonds get refinanced at higher rates, that interest cost is projected to hit $1.6 trillion by 2027. That's more than the entire defense budget, more than Social Security, just interest. Third, falling foreign demand for U.S. bonds. China has reduced holdings from over $1 trillion to under $780 billion. Japan, the largest foreign holder, has been slowly reducing as well. Saudi Arabia, which used to be a reliable buyer, is no longer obligated to recycle petrodollars into treasury bonds. Foreign central banks bought $300 billion in U.S. debt in 2020. By 2024, that had dropped to under $100 billion, so you have $7.6 trillion that needs to be refinanced at much higher interest rates, with far fewer foreign buyers willing to absorb the supply. Fourth, BRICS settlement systems going live. China and Russia have been building alternative payment infrastructure for years. The cross-border interbank payment system, CIPS, designed to bypass SWIFT, the BRICS Bridge initiative for commodity trading outside the dollar, the New Development Bank, an alternative to the IMF and World Bank. These systems have been in development, but 2026 is when they reach critical operational capacity, when enough countries are connected, when enough trade volume shifts, when the alternative becomes viable. 2026 is when America finds out how expensive borrowing becomes when oil no longer protects the dollar. It's when the refinancing wall hits, when foreign buyers are scarce, when alternative systems are operational, and when the consequences of losing the petrodollar become undeniable. So what actually happens when the petrodollar dies and the refinancing crisis hits in 2026? Let me give you 3 scenarios, not predictions, possibilities. Scenario 1, slow dollar. Bleed. This is the managed decline scenario. The dollar doesn't collapse overnight. Instead, it slowly loses share of global reserves and trade. It drops from 60% of reserves to 55%, then 50%, then 45% over the next decade. Other currencies, the yuan, euro, a basket of commodities, fill the gap. For America, this means permanent inflation, not hyperinflation, but sustained 5%, 6%, 7% inflation that erodes purchasing power year after year. Wages don't keep up, savings lose value. The standard of living declines gradually, not catastrophically, just persistently, decade after decade, until the middle class that defined 20th century America is a memory. This is the slow bleed, painful, irreversible, but not apocalyptic. Scenario 2, oil shock event. This is the crisis scenario. Something triggers panic. Maybe Saudi Arabia signs a massive 10-year oil deal with China, priced exclusively in yuan. Maybe Iran starts selling oil to India in rupees at a 20% discount to dollar-priced oil. Maybe a BRICS summit announces a new gold-backed trade settlement currency. Whatever the trigger, it causes a panic dump of U.S. Treasury bonds. Foreign central banks, spooked by the signal that the dollar is losing its oil backing, start selling. Not gradually, urgently. Bond prices crash. Yields spike to 7%, 8%, maybe 10%. The U.S. government can't afford the interest payments. The Federal Reserve is forced to step in as buyer of last resort, printing trillions to monetize the debt. And that's when inflation goes vertical. Not 7%, not 10%. We're talking 20%, 30%, maybe more. Gas prices double in months. Food prices triple. Import prices explode. The currency crashes against gold, against commodities, against other currencies. This is the shock event. Fast, violent, catastrophic for anyone holding dollars. Scenario 3, multipolar oil market. This is the fragmentation scenario. The dollar doesn't collapse, it doesn't disappear, but it stops being the only option. Oil trades in multiple currencies depending on the buyer and seller. Saudi oil to China, priced in yuan. Russian oil to India, priced in rupees. Gulf oil to Europe, priced in euros. American oil domestically priced in dollars. The petrodollar is dead, but the dollar survives as one option among many. America can still borrow, but at higher cost. It can still trade, but without the automatic advantage. It remains a major power, but not the hegemon, not the indispensable nation. This is the multipolar outcome. The world doesn't collapse. The rules just change. And America adjusts to a reality where its currency privilege is gone. No scenario ends with the dollar stronger. That's the key takeaway. Whether it's slow bleed, shock event, or multipolar fragmentation, all 3 paths lead to a weaker dollar, higher costs for Americans, and a fundamentally different global financial system. Now let me bring this home to your daily life, because this isn't abstract geopolitics. This is your wallet, your grocery bill, your future. First, fuel prices. When oil stops being priced exclusively in dollars, when OPEC countries accept other currencies, it means dollars buy less oil. And when dollars buy less oil, the price you pay at the pump goes up. Not because oil is scarce, because your currency is weaker. $4 per gallon becomes $5, then $6, then $7. Not from an oil shortage, from a dollar shortage of value. Second, inflation everywhere. America imports $3 trillion worth of goods annually. Electronics from China, cars from Japan and Germany, clothes from Vietnam and Bangladesh, pharmaceuticals from India, coffee from Colombia. All of it priced in dollars. When the dollar weakens, all of it gets more expensive. Your phone costs more, your laptop costs more, your clothes cost more, everything costs more, and your paycheck buys less. Third, savings erosion. If you have $50,000 in a savings account and the dollar loses 30% of its value against real goods, your savings are now worth $35,000 in purchasing power. The number on the screen stays the same, but what it can buy shrinks. Your retirement fund, your emergency savings, your kids' college fund, all losing value even though the account balance doesn't change. Fourth, job market pressure. When America can't borrow cheaply anymore, when interest costs eat up the budget, the government has to cut spending. That means government jobs disappear. Contracts get canceled, infrastructure projects get delayed or scrapped, and private companies that depend on government spending, defense contractors, healthcare providers, construction firms, they start laying people off. You don't need to understand geopolitics to feel what happens when oil gets expensive. You feel it at the gas station, at the grocery store. When you open your credit card bill and realize everything costs more but your income hasn't changed, that's the petrodollar dying. That's the consequence of Saudi Arabia walking away. That's 2026. Let me reframe this entire story. Because this wasn't really about Saudi Arabia betraying America. This was about Saudi Arabia choosing survival in a world where the dollar is no longer neutral. Where holding dollar assets means accepting the risk that those assets can be frozen, seized, weaponized the moment you step out of line with Washington's foreign policy. Saudi Arabia watched what happened to Russia, $300 billion frozen overnight, and they asked themselves a simple question. If we're ever in that position, if America ever decides we're the enemy, what happens to our reserves? And the answer was clear. Diversify. Accept other currencies. Build relationships with other powers. Don't put all your eggs in one basket, especially when that basket can be taken away with a phone call from the White House. The petrodollar didn't die loudly. There was no declaration of war, no dramatic speech, no crisis summit. It died quietly on June 9th, 2024, when an agreement expired and nobody bothered to renew it. It died the way empires usually do, not with a bang, but with a whimper. Not from external attack, but from internal overreach. Not because enemies destroyed the system, but because the system destroyed itself by weaponizing the very thing that made it powerful. The dollar's strength came from being neutral, universal, trusted. The moment it became a weapon, it stopped being neutral. And the moment it stopped being neutral, countries started looking for alternatives. Saudi Arabia didn't betray America. Saudi Arabia just stopped pretending the old system still worked. And in 2026, America will find out just how expensive that honesty becomes. So here's what I want to know from you. Do you think this really marks the end of the petrodollar? Or is this being exaggerated? Do you think 2026 will be the crisis year? Or will the system adapt and survive? Comment below. I read all of them. And if this helped you see what's coming before the headlines admit it, share it with someone who still thinks everything is fine. Because the petrodollar is dead. The question is whether you're prepared for what comes next.